Welcome back to Over the Horizon, a Bitcoin podcast. Today I have on with me Rajat Soni. He is a CFA and a Bitcoin expert. He has so many Bitcoin videos, too many to count, nearly daily uploads if I'm not mistaken. Today we're going to talk all things Bitcoin, real estate, and many other topics. Rajat, thank you so much for coming on, man.
Absolutely. Thank you so much for having me, Joe. I wouldn't consider myself an expert. I'm always learning. I don't think there's anybody who's really an expert. Everybody's always blown by, let's say, a new idea, a new way of thinking. Everybody's still learning, to be honest, I would say. Nobody's truly a Bitcoin expert, but I'm here to share my knowledge.
Fantastic. I love it. Always staying humble in true Bitcoiner fashion. I want to get things kicked off here for people who may not be familiar with you. Just a quick origin story. I know you used to work at fixed income. Lots of folks who end up in Bitcoin ended up having a traditional finance background. So just kind of walk us through your origin story in TradFi and what brought you to Bitcoin.
Yeah, so I started working in banking in 2015 or 2016, I think it was. I did various roles. I started working in a customer-facing role. I was just helping customers, seeing their bank balances. That kind of gave me a view of what the world looks like. So, for example, I'd see people who'd have $100,000 sitting in their checking account, and that would be all of their savings. I would see other people who had, let's say, $5,000 in their savings account and they had $1,000 credit card balance that they're carrying for a really long time. They're paying 20% interest on it, but they don't realize how interest works. So they don't pay it off because they want to keep the $5,000 that's keeping them secure or making them feel like they're safe. After that, I worked in a brokerage, two brokerages actually. I would see people just gambling their savings away. They would buy random stocks. They'd buy 0 days to expiry options. They'd buy all these different kinds of, I guess, gambling tools, and they try to make it rich quick. So they try to get out of the rat race using these tools that the legacy financial system created, all these derivatives, all these things that really benefit the brokerage more than anything else. You could lose money, but the brokerage will still make their commission. And that's the goal there. They want you to trade as much as possible. I'd see people going from, let's say, $1,000 to $300,000, and then they'd lose it all within a couple of days. And that's the kind of mentality that people have. But I mean, you can't really blame them. The financial system is pretty much broken at this point. The money is dead. You can't really save. You have to find ways to increase how much money you have, because the money that you have is never going to be enough. At some point, whatever money you have is going to be worthless. Even if you have $10 million today, you're trying to pass it down to your great grandkids. By the time your great grandkids get it, they're probably not even going to be able to pay for a couple years of expenses with all the savings that you put together. So that's the kind of situation that we're in. After that, I moved into a fixed income role where I would help, I guess, these family funds, family offices, insurance companies, different kind of companies that would manage their funds through us, and we would help them to invest in bonds where they're getting, let's say, a 3% return. The brokerage is taking 1%. So their return after everything, all the pain that they go through after saving everything, is 2%. But that's now I realize that that's much below inflation. But at the time, I didn't really realize it. And I came across Bitcoin because I was tired of my job. I hated it. I was miserable. I didn't like doing it. It was the same thing over and over again. It was an easy job. I was getting paid well, but I mean, at the end of the day, I didn't have any fulfillment. I was miserable, like I said. And I started posting on social media. I started posting on Instagram first, and probably about maybe a few months to a year after I started posting, I came across a couple of posts about Bitcoin. My coworker told me about Bitcoin while I was working at that last job. I kind of ignored him. But eventually I did come across Bitcoin again. I read the Bitcoin standard. I guess I would, if I'm being honest with you, I probably ended up with more questions than answers after reading the Bitcoin standard, because it is a very confusing topic. I had to read the book maybe 4 or 5 times to really grasp the concepts that he's mentioning. And of course, that took me some time. It took me maybe 3 to 4 years to really wrap my head around why Bitcoin doesn't provide cash. It is cash. That's the most important thing that people don't quite understand. They try to measure Bitcoin on its ability to give you cash flows, but Bitcoin isn't going to give you cash flow because Bitcoin isn't a business. It's not a service. It's not a real estate property. It's not something that's meant to be used to be it's not meant to be used to have utility in your life. Let's say physical utility, like let's say a house. If you buy a house as a rental property, you're basically buying the house and you're selling the utility of that house to somebody else. You're selling the time value of owning that house to somebody else. And with Bitcoin, all you're doing is you're saving. So once I wrapped my head around these concepts, once I wrapped my head around what Bitcoin is, how it works, why it can't be taken down, how more Bitcoin is produced, it became a no-brainer. I mean, Bitcoin to me is the future. I have had podcasts where I've said Bitcoin is just part of a well diversified, balanced portfolio, but I no longer believe that at all. I think Bitcoin and cash is really all you need. And going forward, the people who get rid of their rental properties, the people who get rid of their stocks and they buy Bitcoin are probably going to do much, much better compared to the people who hold on to their rental properties and try to earn cash flow to buy Bitcoin with that cash flow. I don't think that strategy works anymore. And that's why I'm here.
Fantastic. I appreciate the overview. I want to harp on that point a little bit. The fact that Bitcoin has no cash flow. A lot of people will lambast Bitcoin because of that. They'll look at real estate in particular. We can touch on that as well. Why do you think so many people are hung up on the idea that Bitcoin has no cash flow as a point of detraction? There are plenty of other assets that don't have cash flow. Many equities have dividends that are extremely low. Rental properties, obviously, cash flow. Oftentimes they cash flow very little. Gold has no cash flow. Why do you think this is a unique talking point that's used to denigrate Bitcoin specifically?
I think that what a lot of people see Bitcoin as is just something that does nothing. So it's like you've probably heard Elizabeth Warren saying it's thin air. I don't remember who it was, but there are people who are in these positions of authority who claim that Bitcoin is thin air. They haven't quite studied it, and I think a lot of people base their opinion on Bitcoin on those people's thoughts. So I don't think most of the people who say that quite understand what Bitcoin is. And I think one of the reasons why a lot of people look at Bitcoin in that way is that the other assets have their own use case. So let's say, for example, you buy a stock, you buy Amazon. Amazon doesn't give out a dividend, but Amazon has a business behind it that's earning cash flow, and it's basically just reinvesting that cash flow into the business. And you're getting your return is just the future potential of that business in a way. So you don't get the cash flow now because you truly believe that the company can reinvest in itself and it can grow much bigger by reinvesting in itself than whatever you could do with the cash that you're getting. So a lot of people are okay with that. And I think that's one of the reasons why people are okay with not receiving cash flow from, let's say, Amazon or whatever. I don't know if Amazon gives a dividend now, but whatever company doesn't give a dividend, they're okay with buying those companies because they think that the company can manage the money better than them. And then I don't know if they quite realize it, but to get cash flow from Amazon, for example, they have to sell their shares, right? Or they can borrow against those shares if they want to, if they have in a margin account. With Bitcoin, the issue is that it's not a business. There's nothing behind it that's going to improve it. But that's what gives Bitcoin that risk off characteristic where stocks are risky. The company can completely change. They can do a 360 on whatever their beliefs are. They can offer a different product. They can completely change their services. The company could get boycotted, but Bitcoin doesn't have any of that. That's to Bitcoin's advantage because Bitcoin doesn't change. Bitcoin stays the same no matter what. So one Bitcoin from, let's say, 2009 is exactly the same as one Bitcoin that was mined today. Maybe there are, let's say, people have their own subjective reasoning to believe that, oh, one Bitcoin from 2009 is worth more because it was earlier on the chain. But at the end of the day, the blockchain doesn't care. One Bitcoin is one Bitcoin. Whereas stocks of, let's say, Amazon from whenever they were first incorporated are completely different in value from stocks of Amazon today. And that's something that I think people don't quite see. They don't apply that knowledge to their stocks. Another thing with real estate, you mentioned minimal cash flow, but they like the fact that it's something physical that they can hold and they can use if they need to. Gold, same thing. There's no cash flow, of course, but I think people like the fact that it can be used in industrial applications and they can just save in it. They know that the value is going to increase over time. But I don't think they quite connect the dots that the reason why those assets are increasing in value is because the US dollar is increasing in supply. So more dollars are always chasing the same number of those assets. So let's say, actually not even the same number, but let's say gold, for example. Gold's supply is increasing by maybe 2% per year, 1.5 to 2% per year. the supply of US dollars is increasing by 7 to 10% per year. So the marginal buyer of gold is willing to pay you more because they know that over time, the price of gold is going to go up. It's programmed to go up in a way. Its number goes up technology. So what Bitcoin does is it gets rid of the physical utility, the physical characteristics of all other assets. And all it does is it focuses on scarcity, self-sovereignty, you being able to use your money however you want. I guess that's self-sovereignty. It focuses on security. It focuses on all the things that make Bitcoin better money without having that physical utility. So with gold, it's not like gold was designed to be money. We use it as money. We've chosen to use it as money. Precious metals as well. Those precious metals would probably be better off being used in industrial applications and technology than they would sitting in your safe at home. And I don't think people quite grasp that. I mean, I genuinely do think that gold should be going way higher than where it is today if it had a finite supply. And I think that's something that's super important. The one thing that I try to get across is even if gold has a 0.1% inflation rate and Bitcoin's inflation rate is 0%, Bitcoin is infinite times better than gold because over time, even at 0.1% inflation rate, your value is being destroyed. You're being diluted by 0.1% per year. And eventually that 0.1% per year will be 50%, then it'll be 75%, then it'll be 80%, but that's going to take decades. But at the end of the day, because Bitcoin doesn't have an inflation rate, because it doesn't get diluted, it's infinite times better than anything else that has any inflation rate whatsoever. So I think that's something that people don't quite grasp. They try to see what Bitcoin's utility is in the real world. It doesn't have any real world utility, like physical utility, where you can't use it as a hammer, you can't use it as a paperweight, but the utility is in its ability to save, to help us save for the future. And that's the thing that people are underestimating. They don't see that even real estate, for example, is being used as a savings vehicle today. People see real estate as a savings account. People see gold as a savings account. They see the index funds that they buy as a savings account. So what Bitcoin is doing is it's taking this monetary value, the monetary premium out of all of these assets. And I think that they're all going to fall to their utility value. So what Bitcoin is going to do is it's going to absorb all of that premium. It's going to go into Bitcoin and everything else will fall to the utility value, the cost value, the value that the market finds at the marginal buyer.
Well said. You've also said, let's touch on real estate here. What you just mentioned with real estate, it not being a superior store of value. I think you gave a wonderful explanation about why Bitcoin not having any cash flows is not necessarily a reason that it's a bad investment. In fact, its utility is the most important utility, which is that you store value into the future. And Bitcoin is uniquely positioned to do that better than any other asset. You've said that renters often become exit liquidity for real estate investors. Walk through that idea and kind of explain your thesis as to why real estate is not the investment that a lot of people may think it is.
So just to put it simply, I guess, the way that I see it, when you own real estate, if you own more properties than you need, so let's say, for example, you own your first property, you're going to live in it. That's your utility. You're okay with paying the maintenance costs of that property because, of course, you're getting a benefit out of it. If you own multiple properties, you still have to pay for maintenance, repairs, you have to pay for property taxes, you have to pay for your mortgage, you have to pay for all that. But how are you going to get the money if you don't have anybody living in it, if you don't have anybody who wants the value that you can offer? So the way that I see it, the current financial system is designed to ensure that people always want to buy more houses than they need. Because if they want to buy more houses than they need, then the price has to go up and they have to go to the bank to borrow money because banks basically sell leverage. You have to go to the bank to borrow money to buy the property so that you can, in a completely abstract way, make some kind of profit. You're borrowing money at a certain rate, and the rate is intentionally designed to stay low so that the property values keep going up. So there's an incentive for people to borrow money to buy houses. And what this does is I think it breaks the social contract. Right now, so real estate is a physiological need for us. We need real estate. We need shelter. We need housing. what the current financial system is designed to do is it's designed to monetize that need, that basic human need of shelter and of wanting to live in a house and having protection and safety. The current financial system is designed to monetize that. What governments do, I mean, members of government, a lot of politicians are landlords themselves. So what they do is they try to put red tape around developing more real estate. So the reason why we don't have more houses than we need is because there isn't, at least in, let's say for example in Canada, there's a lot of areas that you can't build in, and you need a lot of permits. You need to go through all the government agencies that allow you to build houses, and they take time. They could take a year, 2 years, 5 years to give you your permits. And I think one of the reasons why all of that is happening, why it's so slow to build more houses, because politicians want to help themselves. They want to make sure that the properties that they own keep going up in value. And then in turn, they're helping the banks, because if property values start dropping, we see deflation. Nobody needs to borrow money anymore, first of all. If nobody's borrowing money anymore, they aren't buying things that they don't need. They're not bringing their future consumption to the present. I think they'll look more at opportunity costs. So the way that this is being used to use renters as exit liquidity is the people who own houses, they need somebody to occupy their house in order to pay for the maintenance and repairs that go into that house. That's the main principle here. So they need somebody to occupy the house. And if there's nobody who needs housing, then who's going to rent their house? Who's going to pay for their house? Once you connect the dots on that, it makes a lot more sense, because you see that the system is designed to keep people struggling. It's designed to keep people as renters. If everybody was able to if everybody was able to buy their own house, there would be no renters and there would be no real estate industry. That's the craziest part here. There would be no industry of people who are buying more houses than they need to rent out to other people, and then they benefit from the appreciation of that property. If we could have enough supply, if people weren't hoarding as many properties as they could, if banks stopped lending you against your properties, we wouldn't need so many houses. I don't know if you've seen the stat, but something like 10% of the houses in the US are unoccupied. 10% of the houses in Canada are unoccupied. Why is that? It's because, I mean, number one, they're not livable. They're not in livable condition. The people who own them are just holding on to them. A lot of them are just using them as collateral to take small LTV loans, because the bank knows that the property will hold its value because more and more dollars will chase the same number of houses. The number of houses being built is limited. All of this it all comes together to almost create a system where it's landlords versus the tenants. The landlords need houses to store value, and the government, the current financial system, is all designed to make sure that the value of those houses doesn't fall. You've probably seen the value with Trump, or the conversation with Trump where he said, we don't want housing prices to fall. The reason why they don't want housing prices to fall is because they own houses. Trump has, I think he's a billionaire, and he probably has a significant amount of his wealth tied in real estate.
It's also to protect boomer wealth as well. The typical American
Exactly.
net worth is 55% concentrated in their house. And so that also brings me to another question. Speaking of real estate relative to Bitcoin, right? You mentioned Bitcoin and cash. Those are the two assets people need to worry about. Bitcoin to store your wealth into the future, most reliably. Cash to obviously, have your ongoing expenses, an emergency fund, what have you. Where does real estate play in all of this, right? As a percentage of people's net worth, do you think people should be buying homes? Do you think they should be renting and putting in the difference into Bitcoin? I've asked a lot of people this question. Grant Cardone and Gary Cardone both told me in no uncertain terms that owning a house is extremely dumb. You brought up all of the different liabilities that are associated with just making sure a house runs, not to mention renting out a house, right? And then all of a sudden, if you don't have a renter, you don't have your cash flow. So how do you think about this when it comes to your financial planning frameworks that you speak with people about? Should they own, should they rent, and why?
I think that it really depends on your situation. I would say that owning like a primary residence it's a lifestyle decision more than anything. It's a decision that you have to make on whether or not you want to buy the house. There's going to be a cost involved whether you rent or you buy. At times, renting is cheaper. At other times, buying is cheaper. But you have to also think of this as a long-term decision where, let's say 30 years from now, if you're renting, your rent might be going up and it'll continue to go up. if you buy a house 30 years from now, you pay off your mortgage, you no longer have to pay for that mortgage. So that's an advantage. Of course, that's going to take a long time to be realized, and you may move before that 30 years is over, and that's perfectly fine. But these are things that you have to think about. Everybody's situation is different. I don't know if the people who, let's say for example, Gen Z, I don't think they should be saving for houses. I think they should be buying Bitcoin, saving in Bitcoin, because over time that Bitcoin, let's say for example, you save for a down payment on a house, you put in your bank account, it's going to take you 10 years to save enough. And then after you have that 10 years of savings, it's not like you buy the house outright. You now have to pay for another 30 years a monthly payment just to keep the house. So that 10 years of savings made no difference. You're just saving, but you have nothing to really show for it, because all you're doing is you're dumping it into the property. And I don't know if that's the right way to go for most young people. I think most young people would be much better off owning Bitcoin. But eventually, I mean, there are benefits to housing. I'm not saying that there are no benefits to houses. Housing gives you stability. I think we may have mentioned this in the podcast that we did on my channel, where children or people aren't having children because they just have no place to live. They're constantly moving. Families need stability. Stability gives you a reason to actually invest in your community. If you own a house, let's say for example, if you own the house in your neighborhood, I used to be a realtor, and I know this for a fact. If you own the house in your neighborhood, you're going to probably take better care of your house, and in turn, you're going to take better care of your neighborhood. But if you rent, you're probably not going to take care of your house, because you know that you're leaving after a year. It's a short-term decision. It doesn't really matter to you what the house looks like a year from now. All you care about is the present, and all you care about is your house, the inside of your house looking okay. There's going to be a lot more houses that don't have their lawn mowed, a lot less maintenance being done to houses because the people occupying them don't really care. But if I do think that owning housing has its benefits, but I think that renting also has its benefits. I think it really depends on the situation, depends on what your long-term goals are. Let's say, for example, if you want to stay in the same place for the next 20, 30 years, if you want to, what's it called? If you want to plant roots in that location, then that's different. If you want to stay in the same spot and you're okay with having that house, I think it's smart to buy. But if you plan to move around constantly, then I don't think it's worth buying a house unless you're going to stay there for the entire term of the house, the mortgage.
Very well said. Yeah, you see the average amount of time that somebody owns a home in the United States is 7 years. And so
Yeah.
really it's this idea of I'm going to stay here forever. It's going to be my forever home. But in actuality, the behavior is very different. I'm sure some of that is skewed by institutional investors, but now we've seen that that's banned in the United States. At least they're trying to ban it. So we'll see how that goes and how that affects people's behavior. I want to ask you something. Your pinned tweet, and it's been your pinned tweet for a while, is a video of you talking about why owning 1.1 BTC is going to change your finances forever. So this is the fun part of the conversation where we talk about why that is. I want to get some of your Bitcoin price targets if you make them. But why do you think that, or why do you assert that owning 0.1 BTC will change your finances forever?
So there's a few reasons. Number one, not everybody in the world can own zero point 0.1 Bitcoin. So if you own zero point 0.1 Bitcoin, then you own more than the majority of the world. And I think that people who own zero point 0.1 Bitcoin will probably be in the top maybe 10% of wealth holders at some point in the future. At least that's my opinion. But I think that the important thing to take away from that video is that it won't necessarily help you retire immediately. But having zero point 0.1 Bitcoin, like think about it. Most people have like $400 saved. If less than $400 saved, I think it was something like 70% of people have less than $400 saved. They have to go into debt to make a $400 payment. I think that actually ties in because having zero point 0.1 Bitcoin means that you have what, $9,000 saved up. And think about the freedom that would give you. Let's say, for example, if you don't have credit card debt, you don't have, like, you've cut down your expenses, you're financial, you're a minimalist. Let's say you don't spend too much money on things. The income that you make is going towards enjoying your life. And you can, let's say you have zero point 0.1 Bitcoin. Right now, that zero point 0.1 Bitcoin won't give you financial freedom. Let's say your expenses are $5,000 a month. It's only 2 months of your expenses. But over time, that amount will grow and it'll grow. But I think it's more about the mindset than anything. When you have a small amount of savings, you can take more risks. So that risk that you take can turn into something that gives you another zero point 0.1 Bitcoin or another zero point 0.5 Bitcoin or another 0.75 Bitcoin. And it could be something that could completely change the world. That freedom that comes with owning zero point 0.1 Bitcoin or even having $10,000 saved is huge because it allows you to make better decisions. It allows you to not make impulse decisions. Let's say you get a job offer, you're not just going to take the first job offer you get. You're going to think through it. You know that you're worth more than if somebody's trying to scam you. Whereas, let's say, for example, you have no savings and you need to make your bill payments. You're going to take the first job offer that comes your way. I think that changes things for a lot of people. It gives them the opportunity to make better decisions and to think long term rather than thinking short term because their short term needs aren't fulfilled if they don't make a certain impulse decision.
Gotcha. Very well said. I want to shift gears here. I want to ask you about your wealth building framework, your financial planning framework specifically. You mentioned cash and Bitcoin are the only two assets people need to worry about. My first question is, where does leverage come into play, if any, when it comes to the way that you're talking about financial planning? And then my second question is, between cash and Bitcoin, let's just take a standard American homeowner, for example. Let's say they've got a family of 4. What should their cash position look like relative to their Bitcoin position? And how do you go about constructing that typical portfolio?
So I think most people should probably avoid leverage as much as they can. And the reason why I say that is because leverage can really destroy your wealth if you make the wrong decisions. And a lot of people don't have the discipline to, let's say, for example, you borrow money to buy Bitcoin and then Bitcoin's price falls 50%. A lot of people don't have the discipline to just hold. They'll just sell and they'll end up losing money, which could be a terrible, terrible decision. And you may never be able to recover from that again. So I would say avoid leverage if you can. Just buy cash. I think that's the smartest way to go. But at some point, you're going to have enough Bitcoin that you can borrow against that Bitcoin to buy, to pay for your expenses. So let's say you have $1 million worth of Bitcoin. Your monthly expenses are $5,000, so $60,000 a year. You could borrow against you could borrow the equivalent of 0.06 Bitcoin to pay for your expenses, which compared to your entire stack is only about 6%. With a 50% LTV, that would be 12%. I have tons of videos just explaining this, but you're borrowing as 12% of your stack to pay for your expenses. And if, let's say, Bitcoin's price does fall, if you have the discipline to keep your Bitcoin and to not sell to pay off the debt, if Bitcoin's price does fall, you can add more collateral to increase your LTV so that you don't get liquidated. And I think there are strategies that you can follow, but I don't think most people should be using that right now, especially if they're new to Bitcoin. I don't think it's the smartest way to go. What I would say is stack Bitcoin first, and then over time, just use your income to stack Bitcoin. If you have, let's say, a low interest rate line of credit, then maybe you can use that to buy some Bitcoin, bring your future purchases to the present. I think a lot of people are already doing that. But for most people, avoiding leverage is probably the smartest way to go because it can get out of hand very, very quickly. I don't think most people should be borrowing against their Bitcoin just because, I mean, unless they have the discipline and they know for a fact that they're not going to over leverage themselves and they're not going to sell their Bitcoin to pay off their debt if Bitcoin's price does fall. If they know that for a fact, then that's different. And that only comes with experience. Most people haven't gone through the volatility. They haven't held Bitcoin and seen it fall 70, 80%, including myself. I haven't gone through that. I'm ready to go through it, but I mean, when it's actually happening, it's like that. Have you seen that Mike Tyson quote? Everybody has a plan until they're punched in their jaw or something like that, right?
Punch in the
Everybody has a
face.
plan
Yeah.
until they go through massive volatility. Everybody thinks, oh yeah, it's only going to fall 30%. If it and I'm protected for it to fall 37.5%. What that's the if you have a 50% LTV and your liquidation ratio is, or your liquidation LTV is at 80%, it has to fall 37.5% for you to get liquidated. So for you to start getting liquidated. But if it falls more, how do you deal with that? Most people have no idea. And that's the questions that that's the kind of question that I get. So if you're borrowing money and you have a very surface level knowledge of how borrowing money and how getting liquidated works, you should probably avoid it completely. But if you can answer that question, how do you pay off your debt? How do you decrease your LTV? Then maybe it's time to start borrowing and start maybe even doing a deeper dive into how to make sure that you're protected. But either way, there's a lot of risk involved. If you're going to borrow against your Bitcoin, you can risk having your Bitcoin liquidated. You could have it risk, you could risk having it confiscated. You could risk having the lender go bankrupt. All these things could happen to any company, to any individual. So what I would say is, if you're going to borrow against your Bitcoin, keep your LTV as low as possible. Keep your loan to value, like the amount of money that you, the amount of Bitcoin that you borrow against, keep it as low as possible. I would say maybe 10 to 20% max.
Fantastic. I want to ask you about how emergency funds play a role in that. Dave Ramsey often talks about when you're starting out, having a $1,000 emergency fund, which, as you and I both know, that's not going to cover a hospital bill. Well, I assume in Canada, since it's free, but in the United States, it's not going to cover half a hospital bill. But obviously, having 3 to 6 months worth of emergency expenses, it's something that most Americans are typically advised to do. What's your feeling on emergency funds, and if people do have them, should they have them in cash or Bitcoin, and why?
I think they should have them in cash. And the reason for that is that you want to be able to pay for your expenses. So let's say the worst case scenario happens here. You lose your job at the same time that Bitcoin's down 90%, and you need to pay for some kind of expense that comes up. And without paying for the expense, you're going to like go homeless or something. I don't know what the issue could be. But let's say the worst case scenario happens. If you don't have a cash emergency fund, you're going to have to sell your Bitcoin at that discounted price, and you're going to get screwed over. You're going to lose all your Bitcoin. You're going to lose your entire stack. So I think having that emergency fund is smart because it gives you that buffer to be able to take a risk. It's like having that 0.1 Bitcoin. The buffer of having, let's say, 3 to 6 months of expenses. If you have 6 months of expenses, you could potentially quit a job where you don't think you're getting paid enough. Or you could start some kind of business. You can use the cash that you have to start that business, to fund that business. And who knows, maybe 6 to 12 months from now, it becomes the biggest business in the world. Right. I mean, well, not that big, but you know what I mean? Like maybe it starts funding your lifestyle, and maybe you're much better off because of that cash emergency fund that you have. There, it also gives you the opportunity to take on opportunities that come up. Let's say, for example, you just find a random opportunity where if you don't have cash, then you can't pay for it. You have the cash, you can use it to pay for the opportunity. You could potentially multiply the cash that you have in your emergency fund. And then because of that, you can potentially stack more Bitcoin because of that opportunity. So I think that having some cash is always smart. In the best case scenario, let's say, for example, you don't lose your job and then Bitcoin drops 90% and you have a 6-month emergency fund, you could potentially use that 6-month emergency fund to buy 10 times the Bitcoin.
Very well said. I want to get your thoughts on the system itself. I think you have said in the past that the system is designed to benefit asset owners at the expense of the asset poor, and that inflation is a necessity. In terms that people can understand if they're not familiar with the credit-based economy that we live in, why can't this system allow deflation? Why do banks require it to survive? And how does Bitcoin hedge against that better than gold?
So I think one of the most basic reasons for deflation being avoided is that if there was deflation, then the people who borrow money won't, let's say somebody borrows money to pay for a business and then they need to pay back that money over time and they're paying a certain amount of interest. The assumption here would be that if prices don't go up and people don't want to spend right now, then that person wouldn't be able to pay back their loans. If prices don't go up, they wouldn't be able to cover the interest rate, the interest charges on their loans. And then the other side of this would be if people don't borrow money, then banks they just go out of business. If nobody wants to borrow money, if everybody just has cash and prices keep going down, then who's going to borrow money from a bank? Because paying back the money is going to be harder. The goal of the financial system is to make it so that paying back money is easier over time. It's a way to incentivize people to borrow money. But then the people don't quite understand how the financial system works. They don't quite understand how, why or how the debt that the U.S. government has, for example, won't be paid off. The people who don't quite understand that, they think that saving in dollars is fine. And I think the entire system is basically designed to move wealth from the financially illiterate to the financially literate. And usually the people who are financially literate are the ones who own assets. If you own dollars, the amount of dollars that you have are always going to be a smaller and smaller percentage of the total amount of dollars that exist, because every single day more and more dollars are being added to the economy and just dumped into the economy. And we have no idea how many dollars even exist. We have no clue. Whereas with assets, let's say houses. We may not know the exact number of houses that exist, but we know that it takes time, effort, and energy to produce more houses. Whereas the dollars that you can use to buy those houses cost nothing. The bank can just print more. It's basically a subjective, it's just a subjective reasoning behind whether or not they're going to lend the money to the person who wants to buy another house. So they can just create demand out of nothing if they really want to, if the banks really want to. They can create demand out of nothing. There's really no opportunity cost for them because the money can be created out of nothing. So I think the most basic way to explain this is that over time, more dollars will chase a relatively finite number of assets. So over time, it takes more time to build a house than it does to fund that house. It takes more time to build a company than it does to borrow money to buy shares of that company. So over time, the price of assets keeps going up because the number of dollars is infinite, whereas the number of assets is not infinite. It takes time, effort, and energy to produce those assets. So it takes more time to get access to those assets, to produce those assets than it does to buy those assets with dollars. And because of that, asset holders are always benefiting. They can always assume that the value of their assets is going to go up, and they can go to the bank and they can borrow against those assets that they have to pay for their lifestyle. So the people who own assets, their life gets easier over time, whereas the people who don't own assets, their life gets harder because their savings are being debased constantly. The price of everything has to go up because of inflation, because we need to avoid deflation. And then on top of that, the people who own assets are the ones who are able to get that money added to the economy. So it's almost like a double, it's like a double, I guess you can call it a double whammy for the people who save in currencies. The currencies are being devalued intentionally. And then on top of that, the things that they need to buy, let's say even food, is getting more expensive over time. So their life is getting harder and their savings are disappearing.
It's not a fun combination to have. It's absolutely not. Which kind of leads me to our next question. Your most recent video that you posted, which I watched and was fabulous, by the way, is that the crux of it was that you build most of your wealth during bear markets, not bull markets, right? Bull markets feel great. I know you and I both probably want a bull market, right? A lot of people do. But the reality is that when price is down, when sentiment is low, that's when wealth is created, right? But it's also the time when people tend to think Bitcoin is dead, Bitcoin is never recovering from here. So talk a little bit about how people can sort of avoid that inner voice and why bear markets are so important to focus on for wealth building in Bitcoin.
So especially in terms of Bitcoin, the bear markets are, I think, in the most important thing because Bitcoin's price falls 60, 70, 80% sometimes from the top. If you could get a 60% discount from the top, then why wouldn't you want it? I mean, I wouldn't bet on that happening. I would buy no matter what. But if the price comes down while you're buying, then what's the problem? I think that's great. You're getting more Bitcoin for every dollar that you have. Essentially your purchasing power is going up. So if let's say you earned $10,000 from your job, if Bitcoin's price is 200K, you're only going to be able to get 5 million Satoshis. Whereas if Bitcoin's price drops to 50K, you can get 20 million Satoshis. So 0.2 Bitcoin. I think that's so important. So the way that I see it, I think the title of the video was "You Build Wealth During Bear Markets," you build wealth during bear markets. And what I mean by building wealth is what exactly is wealth? So wealth is freedom. It's the things that you need to survive. That's essentially what it is. So wealth will give you the ability to pay for the things that you need at some point in the future. So what I mean by that is that if you can own assets, that's wealth. During bear markets, wealth is essentially being sold to you at a discount. So if you can get a 50% discount on Bitcoin, why not? I think that's a great way to do it because in the bear market, when everybody else is scared and they're selling and they're giving away their Bitcoin, what you're doing is you're doing the exact opposite. You're buying as much as you can and you're accumulating that wealth at a discount. You're getting it at a cheaper rate than everybody else was able to buy it. Let's say we assume that people bought at the top, they bought Bitcoin at the top and then they sold at the bottom. Those people are losing a significant amount of wealth, and that wealth is essentially being transferred to you. So during bear markets, you get a discount, you get to buy more Satoshis for every dollar. Your purchasing power has massively increased compared to during a bull market. And because of that, you are able to build wealth much faster than somebody who only accumulates during bull markets, who only accumulates while the fear and greed index is at extreme greed. If somebody buys at extreme greed versus extreme fear, they're going to have a lot less Bitcoin. So what they're doing is they're buying during bull markets and they're selling during bear markets, or they're ignoring Bitcoin during bear markets. The people who buy during the bear markets are going to do much, much better because they're going to be able to accumulate way more Bitcoin for the same dollars.
Very well said. Speaking of where we are now, as far as bear markets are concerned, it seems like sentiment is more in the gutter than ever. A lot of people are coming around to this realization that we're in a bear market. There's an equally loud school of thought that says Bitcoin is rounding out its bull market correction and we're headed higher. Obviously, Bitcoin has missed out on the rally that's been led by metals. Bitcoin is even underperforming equities. Since October, it's really disappointed a lot of investor expectations. Where do you think we are now as far as Bitcoin is concerned? And what's your outlook over the year? But more importantly, how should people think about this move in the context of the next 5, 10, 20 years? Because I think all too often people get lost in the near-term price action. When in actuality, Bitcoin is an asset you want to own for generations. It's not an asset you're trading in and out of. So I guess the question is twofold. Like, where do you think we are with Bitcoin currently, and how should people be thinking about this in the context of where this asset is going?
I think it's always important to think long-term. If you're thinking short-term, I think you're falling for the noise. I think you're getting distracted. If you think in months or weeks, or let's say 2 years from now, you're looking at basically data that's not reliable. If you think that Bitcoin is going to be up 2 years from now, there's probably a strong chance that you'll be right, but there's also a chance that you could be wrong. So the way that I see it, only buy Bitcoin if you have a 4 more year time horizon. If you can hold for 4 more years, then you're doing great. But if you can only hold for, let's say, a year, you probably shouldn't buy Bitcoin. If you can only hold for 2 months, then you probably shouldn't buy Bitcoin. If you really think about it, from October till today, it's been what, maybe 100 days or so? It's not even
Thereabouts.
4 months, right? It's not even 4 months. And people are panicking. They're thinking that Bitcoin is going to zero. There was an interview between Michael Saylor and Danny from What Bitcoin Did, where Michael Saylor said nothing can be built in 4 months. You can't build anything in 4 months. Think about it. You work out a lot. How much muscle can you gain in 4 months?
Unless you're starting out, not a lot. Not a
Right.
lot. It's all marginal.
Right. And Bitcoin's not starting out. Bitcoin is, I would consider, a mature asset. Right. So when you think of it from that perspective, when you think about how much you can build in 4 months, he even mentioned in that interview, you can't even produce a kid in 4 months. Right. It takes 9 months to give birth. So I think nothing can in the last 4 months, nothing has happened. It's just people selling out of fear. A lot of people are just giving their Bitcoin away because they think it's going to go lower. A lot of people believe that there's going to be a 4-year cycle. But I think that the market has completely changed. I think that because of, let's say, STRC, for example, MicroStrategy is going to be able to buy a lot more Bitcoin than anybody had previously imagined. I personally thought that MicroStrategy wouldn't be able to get even close to 1 million Bitcoin, but it seems like they're getting there, and then they're going to get to 2 million. They're going to get to 3 million. Seems like everybody's selling. But who knows what's going to happen in the coming few years. I personally think that STRC is going to make it a lot easier for MicroStrategy to accumulate more. And because of that, because of all those factors, I think the next 4 months we could go down another 40%. We could go down another 50%. I wouldn't be bothered by it. I'd actually enjoy that because I'd be able to buy more Bitcoin with the savings that I have or the money that I make in that time period. I'd be completely okay with it.
Gotcha. Fantastic. I think it's an important reframe for everybody who's afraid right now. What do you think of the metals rally? You have a lot to say about gold and why it's money for bankers, it's inferior to Bitcoin, etc. So talk to us about what you think is going on with gold and silver right now, or more importantly, despite the rally, why Bitcoin is still a superior asset to gold. Just the difference between those two things, because gold and silver is on everybody's mind. A lot of Bitcoin people that's been top of mind for them. So talk a little bit about how you think about gold and silver, and compared to Bitcoin.
Okay, I want to ask you a simple question. If I wanted to send you gold, how do I do it?
It's going to be very expensive for you. You're going to have to fly it to me, get a lot of insurance in the shipping. You're going to have to drive it to me. It's going to be quite expensive to do.
And then I have to trust third parties to get it over to you. So let's say I mailed it to you. I have to trust that the mail that I sent you is exactly what you got. And with Bitcoin, how do I send you Bitcoin?
You type in my address and hit send.
There you go. I think that's it. That's the difference, right? How do I send you gold versus how do I send you Bitcoin? If I want to transact, let's say we go to a gold standard and I want to buy something from Amazon. How do I pay Amazon? I can't set up an e-commerce business with gold as the base layer. If anything, the only thing that I can do with gold is use it as a paperweight. There's really no other use case for me. I'm not creating any kind of industrial products in my house. I have no real use case for it. The people who are buying it, all they're doing is they're predicting that the price of gold is going to go higher, and they probably don't even know why. So there was actually, I saw an article. I think it was I included it in the video that I made today, but I saw an article that said how 60 to 70% of the gold supply was mined in the last 65 years, which is wild. And that's wild because in the 5,000 years before that, only 30% of the total supply that's issued today or that's above ground today was.
And the key question is, if the supply schedule was able to accelerate that much with the rise
Yes.
of AI over the next 5, 10, 15 years, how much more is it going to accelerate? Especially now that gold is above $5,000 an ounce.
Right. And who's incentivized to bring gold out of the ground into the market? Who's incentivized? Who knows where gold is on Earth? How do we know that we're not going to be able to go into space to get gold? I know it sounds crazy today, but we're thinking about it. At some point, somebody is going to act on it and they're going to make it happen. Who knows? Maybe Elon Musk is working on that right now. We won't know. We'll have no idea. We don't even know how much gold exists. So just all those things combined, you can't send it to anyone. Can't really do anything with it. How many people are paying for things with gold? Nobody. Not a single person is paying for things with gold. Even Peter Schiff, he claims to love gold, but he doesn't even accept gold for whatever he sells. Nobody accepts gold. That's the plain and simple truth here. Because we're living in a digital economy. We're basically living on the internet. And how do you send somebody gold on the internet? You can't. So Bitcoin is a superior in every single way. The way that I see it, gold requires fiat currencies to survive. Without fiat currencies, gold is worthless because you can't send it to anybody. The reason why the reason why sending gold is so difficult is, so if I were to send you gold, it's so difficult because it's physical, and fiat basically solves that. I can send you fiat. I can send you money through PayPal, for example. I can send you whatever money I need to. But what that introduces is third parties. So what Bitcoin does is it takes all of the best characteristics of gold and Bitcoin, or gold and fiat, and it combines them into one package where you can use Bitcoin as not only a store of value, but also a medium of exchange and a unit of account. So gold is just a great store of value. You can't really use it as money. Who's carrying around gold? People who say that, I mean, they're not being realistic. You use fiat because gold can't be used as money. People claim that they use fiat because they want to keep their gold and they don't want to use their gold as money because it's superior money. But at the end of the day, you use fiat because you can't use gold as money. How do I pay you with gold? I can't. It's impossible. So what Bitcoin does is it basically fulfills all of the characteristics that we need money to have. It allows you to fulfill all of the functions of money. And because of that, it's superior to gold in every single way.
Very well said. I think anybody who may still be on the fence needs to listen to that explanation to understand why Bitcoin is superior to gold. Talking about Bitcoin education, you've often said that people need to be educated on Bitcoin before they purchase it. And I think that that's something I tend to agree with. It's not an asset that I tell people they need to run out and buy tomorrow, but rather cultivating a framework around why you're owning that asset is more important, because Bitcoin's extreme volatility. Chances are, if you don't have a firm foundation for why you're holding the asset, you're going to be shaken out. So talk about Bitcoin education frameworks that people should adopt before considering the asset. And then what are some of the key materials that you believe people should be exposing themselves to during that education process?
So I think there's a lot of nuance to that. A lot of people will probably sell early if Bitcoin goes down and they don't quite understand what it is. But I also think that you need to have some Bitcoin just to have some skin in the game in order to actually want to study what Bitcoin is. So I think that's important. I think owning it is important, but also studying it is important. So what I would say is that it's important to find the right balance, right? So let's say, for example, you have $1,000 net worth. You put all $1,000 into Bitcoin. You may not be able to sleep at night. Let's say you have a $10 million net worth. You put all of it into Bitcoin. You don't understand what it is. You're probably not going to be able to sleep at night either. Whereas, let's say you have a $10 million net worth. You buy one Bitcoin. Let's just round up to $100,000. That's 1% of your total net worth. You don't really care what happens to Bitcoin, but you'll be curious. You'll be curious enough to study what Bitcoin is, to see where it's going, to make sure that if Bitcoin is meant to go up, maybe you'll buy more. And it'll give you that incentive to study it, to learn about what it is, to figure out where it's going so that you can actually buy more. A lot of people aren't doing it that way. What a lot of people are doing is they're buying it almost like, I think what it's called in video games, it's spray and pray. So what they do is they play the Call of Duty, for example. You don't aim at anybody. You just shoot. You try to hit enemies. That's essentially the goal. That's essentially what people are doing when they don't study Bitcoin. They just try to put all of their money into Bitcoin, and it's almost like a gamble. They expect it to go up because it's gone up in the past, but they have no idea why it'll go up. So I think there's a balance required where you have to understand Bitcoin, but before you can understand it, you have to put some money into it so that you can really see how it moves, how it performs, how it acts during certain times, during certain events, for example. Some of the resources that I would recommend are there's one book called The Price of Tomorrow, really great. There's also Layered Money, really like that one.
Both of those are actually side by side on my bookshelf
Are they?
behind me. You can see right there,
Oh,
Price of
I see it. Yeah,
Tomorrow, and
I
then
see.
Layered Money right there. Yeah,
I see them
funny you
both. Yes,
mentioned them.
yes, I
Yeah,
see it. The Bitcoin Standard is really great. Do you have that on your shelf?
I do. Yeah, let's see, right there.
Oh,
Yeah,
there. Okay, okay. That one's really great. I haven't read it yet, but Larry Lepard's
the big print.
The Big Print. Yes, is that on there? I don't think it is. It's orange.
It's not on there now because I actually loaned it to a friend. So
Oh, there you go. Okay, so I think that's a great book to read. You have the Fiat Standard there. I can see that really great book, and I think what it does is reading different books gives you the perspectives. It gives you different perspectives from different people. So let's say, for example, if you only read the Bitcoin Standard, you may not understand why the fiat currency financial system is such a big issue. If you only read the Fiat Standard, you may not know what the solution is to that problem. It gives you a bit of an overview of what Bitcoin is, but Safety mostly focuses on why fiat is a problem in the fiat standard. So I think getting knowledge from these different books is so important because it gives you different perspectives. It gives you a different angle to look at the content that you're looking at. It gives you just a different angle on the world from a different person's perspective. I think that's super important. Other than that, I mean, I have tons of YouTube videos that I make. I make YouTube videos every single day. I try to post them whenever I can. More recently, I haven't posted every day, but I think I have a pretty deep library of videos that people can watch if they really want to learn. I've gone into different topics like why food is being attacked by fiat, why our food is worse. For example, why real estate is inferior to Bitcoin, why gold is inferior to Bitcoin, why stocks are inferior to Bitcoin. I've made videos about all of this. I think that's a great place to start as well, in your videos as well, right? There's tons of people creating content. I think learning from just one person is not the best thing because everybody has a different perspective. You can verify the knowledge that you got. Let's say, for example, if somebody watches my video and then they watch your video, it's almost like confirming that what I'm saying is accurate. And then they watch a third person, then they watch a fourth, fifth, 10th person, and all of them come to the same conclusion. Think about it. We don't know. I've never met you before we started talking about Bitcoin. And the way that we came to even doing this podcast is because of Bitcoin, because we came to the same conclusion about Bitcoin. And now there's millions of people out there who have the same conclusion, and you can learn from every single one of them.
phenomenal. Very well said. To round this out, one of my final questions, obviously a lot of people are financially illiterate. Many people don't do things correctly when it comes to allocating their wealth properly. What's the one thing, if any, that you notice more often than not in your client conversations or just generally out in the world that people should stop doing immediately if they want a real shot at financial independence, building their wealth, growing their wealth? What is the one large mistake that more often than not you see people make that's preventing people from achieving their wealth building goals?
Really great question. I think one thing that really hurts a lot of people. Actually, I'll give you an example of a client that I had. So this client was he was some kind of doctor. I don't remember what kind it was, but he was some kind of doctor, and he was making like 300 grand a year in the U.S. 300K is a pretty decent amount of money, but he had no savings. He just had a house. He had, I think it was like $12,000. I don't remember what the exact numbers were, but I can look through the numbers. But he had a house and he had like barely anything to show for the work that he's done for the past 20 years. He was in his 50s. So when I looked through his statements, a lot of the expenses were coming from DoorDash and Uber Eats and just convenience-based purchases. People or his wife spending money on convenience. His children spending money on convenience. His wife was spending $2,000 to $3,000 a month on just food delivery. It was wild. They had nothing saved. I think one thing that holds a lot of people back from being able to build wealth is convenience. They're paying for a lot of convenience, and convenience is super expensive. If you want to cook at home, all you're doing is you're spending your time and you're buying the food. You don't have to have some kind of monetary expenditure to produce that food. Whereas if you're buying food from, let's say, Uber Eats, not only are you paying the restaurant, you're also paying the person who's basically chauffeuring that burrito to your house. You're hiring a private chauffeur for a burrito, and you have to pay for that. That's your cost. And I think that's what makes it so that, let's say, for example, if you want to make the burrito at home, it's going to cost you in time, but in terms of dollars, it's not going to cost you much. Let's say it costs you $5. If you go to a restaurant, maybe it'll cost you $15. But if you have that burrito delivered to your house, maybe it'll cost you $35 because of the convenience of not having to make it yourself and not having to go to the restaurant. So I think convenience is one thing that really kills a lot of people. Other than that, I think there's a lot of subscription services that people have that they're not really using. They're spending a lot of money on what they think are necessities, but they're upgrading their lifestyle. They buy the luxury version of that necessity. So let's say if somebody wanted to buy a car, they think transportation is a need. Of course it is, but you don't really need a Mercedes. You don't need a BMW. You could be paying $100 a month for a car, or maybe not $100 a month, but let's say $200-$300 a month for a car. But people choose to be paying $1,200 a month for a car. I saw a video of a guy who pays $1,800 a month for a pickup truck, and he doesn't even work in construction. That's wild. That's crazy to me. Like, all that money, they could be using that money to improve their lifestyle for the future, but they're just wasting it. They're just giving it to the dealer. And the dealer is making tons of money through financing. They're making tons of profit through the actual car. It's terrible all around. It doesn't help their financial situation at all. If anything, I mean, they're losing because of that financial decision that they made in the past.
Gotcha. Very well said. The last thing I want to ask you about, and thank you so much for your time, by the way. I think this was a fantastic episode. Viewers are going to find a lot of value in it. I do appreciate you coming on. Is a couple of times on your YouTube thumbnails as I've scrolled past, it said things like, you can buy $100 for $1 today. So at today's Bitcoin prices, that would assume a Bitcoin price of $8.8 million. Theoretically, right? If we're looking 5, 10, 20, 30 years out, what do you think Bitcoin's total addressable market is? Let's just assume everything stays flat. And the only thing that will happen is that monetary assets are going to deflate back down to their utility value, and Bitcoin's going to siphon away that monetary premium. What would you view as the theoretical percentage of total global wealth that could flow into Bitcoin? And what do you think, given the roughly $1 quadrillion in total global assets we have today, Bitcoin's price would be if it would siphon the monetary premium away from these non-monetary assets?
I mean, I think we already know that, let's say, real estate is worth $300 billion or $300 trillion. 70. How much are bonds worth? Like 320, something like that.
Yeah.
Stocks are worth like 110, 120. We have precious metals that are, at the time when that square chart that Jesse Myers made, at the time gold was like 25 trillion. Now it's like 35, 36 trillion. So I think that as people figure it out, Bitcoin's going to take a bigger percentage of the total. I think everything is going to grow. So let's say, for example, right now it's at 1 quadrillion, 1,000 trillion. At some point, it'll go to 2 quadrillion, 3 quadrillion, 5 quadrillion, 10 quadrillion, whatever the number is. It'll keep going up. But what you'll see is that right now, Bitcoin is probably like 0.015 or 0.15% of total assets in the world. At some point, it'll go to 1%, it'll go to 2%, 3%, 5%, because wealth will move from those other assets into Bitcoin. And those other assets are going to continue to grow, but Bitcoin is going to grow much, much faster. So what did we see with gold? It went from a certain percentage of global wealth to now a significantly higher percentage of global wealth. And that's only because gold has grown faster in a very short period of time compared to everything else. And that's probably going to happen the exact same way with Bitcoin, because Bitcoin is a superior savings tool. It's a risk. I would consider it risk-free. And because it's risk-free, I think more people will figure it out, and they will move their wealth from Let's say they have money in index funds. They're going to move that money into Bitcoin. I personally did that. I actually had a client who he had 15 rental properties. He sold 10 of them to buy Bitcoin, which is crazy. So what that's doing is it's adding more supply to the real estate market and it's decreasing demand. It's fulfilling the demand that's already there. So he sold those properties. Other people are selling bonds to buy Bitcoin. I had somebody who got rid of their certificate of deposit to buy Bitcoin. There are other people who are selling their index funds to buy Bitcoin. That's going to happen to every asset. I don't know what the percentage will look like. I mean, I wouldn't be surprised if in the next 20 years, Bitcoin is 5 to 10% of global wealth. I really wouldn't be surprised. I would be, actually, I mean, I would be surprised to see it that low. I think it could go much, much higher than that because Bitcoin is superior to everything else. It's a superior asset that I think everybody will have to adopt at some point.
Outstanding. And that would imply Bitcoin prices anywhere from $5 to $10 million. Actually, substantially more than that. I don't want to add another zero and put a B in there, but you'd be looking at billions and billions and billions of dollars in market cap and a Bitcoin price well over $10 million.
Yeah, I can see that. I mean, I personally think that Bitcoin, so I have a video where I said Bitcoin runs out at every price. I genuinely believe that. I think at some point, we're not going to be able to, we're never going to go below 100,000. Then at some point, we're never going to go below a million. Then at some point, we're never going to go below 10 million because the money that Bitcoin is being valued in is essentially worthless. We have US dollars, which are created out of nothing. There's no supply limit used to price something that has a finite supply. 21 million versus infinite. That 21 million is going to be worth infinite at some point in terms of US dollars.
Very well said. Infinity over 21 million. That's amazing. That's one heck of a price target. I could say that much. Thank you so much for coming on, man. It's been fantastic. We're going to blast this out all over social media tomorrow morning once we post this. But for people who may not follow you just yet, where can they find more of your work and stay up to date with what you're doing?
If you go on YouTube, you could just search for my name and Bitcoin. So Rajat Soni, and then search Bitcoin, you'll find me. If you go on X, you'll find me as well. My handle is just Rajat Soni, no spaces, no underscores or anything like that. Those are the main platforms that I post on. I also have my own private community where I have extra content. If people are interested, they can join. We do weekly live sessions and all that in that community. I think it's a lot of fun. A lot of people are scared and they're worried about where Bitcoin is going. And I think we address a lot of those concerns in that community, which has worked really well for a lot of people. Those are my main ways to get in contact with me, to absorb more of my content.
Excellent. Those will all be linked in the show notes. Rajat, thanks again for coming on, and we'll talk to you soon.
Thank you so much for having me.